had a few conversations this morning. There is real concern about a slowdown overall. Does the Fed engineer a hard landing? Look at the data, look at mortgage rates, look at what's coming from China or lack thereof. Globally, the economy is slowing. Just giving you some of my notes here. Want to get your reaction.
I think that's right. And I think that we got something that was really an amazing change from two Fed heads, so to speak, Brainerd and Daly. And what they're basically saying, and I think that there's a lot of truth to it right now, and I would summarize it by saying that inflation running at 40-year high is as harmful as not having a job, according to the Fed's Daly. I thought that was very good. And then we had some very thoughtful comments by Brainerd, who is really, I mean, it's gonna be she will be a number two, really talking about the idea that we're way off the rails here because the working person is going to get hurt. Now, these were people who very much protected the working person and were trying to get jobs. But now they feel that maybe they screwed up, went too far. A little remorse at the same time as maybe there was a slowdown to begin with.
All right, so what is that set up for? Is the bond market trying to tell us something here? I mean,
yes.
Is the likelihood of a recession growing with the Fed's continued plan to, I mean, maybe we get even 50 basis points the next meeting in terms of tightening and what does seem to be at least signs of a slowdown?
Well, what I would say is we have to look at there is an analog, and that's the October 2018 analog, where you saw a tremendous decline in tech in particular. And that was because the Fed decided it's time. And they talked it into a downturn. Most importantly, you saw tech down between 20 and 50%.
Right.
In 3 months' time. And that's what you have to be most worried about, because those are the ones that go down when they want to tighten. Not forget that. But also, David, I mean, I had a fellow by the name of Leo Iran on yesterday. $17 billion in freight run by Uber. And he traced out a scenario. He said some rates are down 30, 25. But, of course, off a very high rate. They're up 60% year over year. But he made the point. He said, here's what we see. We see trucking finally easing up at the exact same time that inventories are building.
Right.
That's recession.
It is. Yeah. That's what you take away from that. Look, we talked a lot about that, and there has been a lot of focus on the transports in part, and trucking in particular, but others as well, FedEx, even UPS, and just
UPS
what seems to be
killed.
Yeah.
Well, that just shows
justified.
You major slowdown in freight. The transports are really signaling a slowdown. There's no let up in production, and yet we could run into a glut very quickly. Now, the 2018 scenario is much more of an attack on tech, just because that's the highest multiple. No reason to panic if you're in a lot of other sectors. But I think that we are, let's just say, the time to be more conservative is now.
You do? You think so?
It's now. When you have two Fed people recognize that, you know what, growth is hurting the working person instead of helping, because the growth is too high, but more importantly, inflation's too high. Well, you know, inflation running at 9 and wages running at 5, that's a real slaughter to the working person.
Shepard Smith here. Thanks for watching CNBC on YouTube.